It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
And he's rightly cornered. He doesn't know what to do because no one knows what to do. He's gotten himself into a situation that he can't get out of. The No Forever Wars president is right now trapped very clearly in a forever war. On a tipping point scale, this is very clearly, I think indisputably, the beginning of the end.
Well, that is Michael Wolf's take on this week's crazy stuff that has been coming out of Donald Trump's mind. And welcome back to the Real Estate Breakfast for another weekend. Yes, breaking down for you the Australian property market and the bigger picture stuff with this global shock that is continuing. Got another busy Saturday morning property show coming up. Understanding the Australian property market starts right here, and it's nice to have your company. It is a Saturday, April the 11th. And good morning, Eve. Thank you so much for taking the time to email us. You are in Brisbane. And you say that from somebody in their 20s saving to enter the property market, all this BS going on from Trump is causing you to freeze moving forward and buying your first property. You say that you fear that you might not be able to service your mortgage due to the way that the world economies are forecast for the rest of the year. You say that you will remain renting for the rest of 2026 and that you will see what happens leading into 2027. You say that your aim would have been to move into your unit by 2027, but I'm being cautious to take this approach. Are other listeners you ask of the podcast feeling the same way? You say that your parents are helping you and even your parents are on your side and the way that you're approaching this. Wow, there is a lot to unpack there, Eve. You're not alone. That is one thing. A lot of first home buyers right now are feeling exactly the same hesitation. Interesting that your parents are feeling the same way. Obviously, they've got a financial stake, so that is causing them some concern because, hey, I don't know the financial situation. They may be refinancing their property. Who knows? Global uncertainty can shake confidence, I'll say that, especially when you're committing to something as big as a mortgage. But do keep this in the back of your mind. Remember that property decisions are long-term, not based on short-term global hits. And if your finances are solid and the purchase makes sense, timing the market, as we say, perfectly is almost impossible. So taking a cautious approach is completely valid. Just don't let fear alone be the decision maker. So off the back of that, let's take you into Sydney and to catch up with Anthony Landau from Equilibria Finance. And good morning and welcome back to the Saturday Property Show, Anthony. Interesting email there from Eve.
Yeah, good morning. Great to be here on this Saturday. And look, I think Eve's email is fairly reflective of a lot of people at the moment taking a cautious approach. It's a challenging environment for buyers, for sellers and for existing mortgage holders. I think your last point was well made around really taking a long-term approach, understanding you do get oscillations in the market over time and just making sure you're cautious but comfortable about what you're doing.
Pretty interesting too about the parents who are siding, because most parents will want to get their children into the property as fast as possible because they know the sooner you enter, the more you will start to acquire equity. But, you know, this is a worry for parents as well, clearly.
Yeah, look, I think for first home buyers, particularly if they're buying up to 95% of the value of the property, if they're at their maximum capacity, if they've only got 5% equity to start with using some of the government programs, that there might be a bit of caution coming in from the parents. If we do get a dip in market, they might be in a negative equity position, rates go up, repayments go up. A little bit of caution makes sense, but obviously with a bit of a market cooling becomes opportunity as well. So it's a bit of a double-edged sword at the moment.
Yeah, definitely double-edged with the market cooling and those opportunities to follow. If you find yourself agreeing with Eve, we'd love to hear from you and your concerns or inability to move forward in the market. We've got the voice message recorder below or the email address, myrealestatepodcast@gmail.com. Anthony, we know the market is slowing in parts of the country. Trump, he has thrown this curveball on the world's economies. Maybe he's going to burn the whole house down, who knows, but are you seeing more clients pause or walk away from these pre-approvals compared to earlier this year? What's going on?
Yeah, look, we are seeing a lot of clients, I guess, take a more cautionary approach. In terms of that, it's really making them re-understand what they're able to do and factor in potential interest rate changes, as well as inflationary pressures, obviously, with the increase in the oil prices flowing through to petrol. We're also getting some fears coming through. Westpac, for example, said there might be 3 more cash rate increases. Inflation might peak at over 5%. So I think there's a lot of sentiment flowing through the market that reflects that sort of uncertainty around how high will inflation get? How many more rate increases will we get? Do I just sit the market out for 6 months, focus on my deposit, focus on my savings, and come back at it maybe in 6 to 12 months once there's a little bit more certainty? So it's not an uncommon picture. We're also seeing some sellers take their property off the market as well, just to wait until things have settled down a little bit. Across the market, there's uncertainty, but a big thing we're telling our clients is just understand what you can do, adjust your scope, and then quietly go about making informed and sensible decisions, because with a cooling market, there will be opportunities for buyers as well.
Yeah, so something that Anthony said there, 3 more cash rate rises for this year. If you are a parent and you are financing your child into a property, how much of that is in the play at the back of your mind with regards to helping your children into the real estate market? We would love to hear from you as well. Rising interest rates, they have reduced borrowing power, as you're saying there, Anthony, and changed what people can afford. That is reshaping buyer behaviour and sentiment. Yeah, so how much has borrowing capacity dropped recently, and is that the main reason that people are holding off? What do you think?
Yeah, look, higher interest rates do reduce borrowing capacity. Essentially, it increases loan repayments and it increases, ultimately, the assessment rate. If you were being assessed with the 3% buffer at 8%, your assessment rate becomes, for example, 8.25 or 8.5% if there's 2 rate rises. If you get a 50 basis point increase, which might be 2 cash rate rises, your borrowing capacity might decrease from $35,000 to $40,000. That means you're looking at a property valued at $35,000 to $40,000 less than you were before. So if we get 2 or 3 rate rises, if we, for example, get a percentage point increase, that's significantly impacting what people are able to borrow and potentially purchase, which might be the difference from buying a townhouse to a unit or upgrading from a townhouse to a house. So it does have an impact on buyers.
Yes, the younger buyers, no doubt about it, they are more sensitive to rates and cost of living increases, making them more hesitant to commit. And then you've got the Donald Trump factor in all of this. It is the Saturday Morning Property Show. We are back in just a moment talking about investors reassessing risk versus return, and whether or not it's a wait and see becoming the dominant mindset at the moment. We've got more after this.
From the emotion of property, the economic inflation, managing your expectations, lack of stock, price growth, construction appetite, days on the market. Stay informed with us and know your property. You're listening to the Saturday Property Market Update.
It is a Saturday morning and the Saturday Morning Property Show. If you are heading out the door later on this morning, having a look at property across the weekend, good luck with all of that. Anthony Landau is with me talking property. Yeah, we want to check in on investors reassessing risk versus investors' return because higher interest rates, especially the costs, are forcing investors to rethink deals even with strong rental demand. So I want to put this to you. Are investors still active, or are rising costs starting to outweigh the rental returns?
Yeah, really interesting. It's a salient point to keep investors and owner-occupiers separated because their behaviours right now are starkly different. We had investor credit flows a month or two ago around 35 to 40%, and home buyers was in the 20s. So investors came back really, really strongly on the back of strong capital growth in some markets. We were having cash rate increases, but with strong rentals, investors were making some good, strong long-term decisions. It's really hard to read the game right now with investors. As you make the point, the cost of funding a property is going up and potentially will go up again in May, maybe once or twice more this calendar year. That does have a significant impact on investors. I think the other thing that might impact investors is the sentiment around the looming changes in the budget to capital gains tax concessions, where the concession, which is currently a 50% discount on the profit on your marginal tax rate if you own a property for over 12 months, being slashed to 33%, and negative gearing limited to 2 investment properties. Big changes for investors. That could impact behaviour before the budget and potentially after the budget as well. Will that slow investors down? I think the other thing is investors are incredibly good at finding opportunities. We've got cooling markets in Sydney and Melbourne. We've got markets in Brisbane, Adelaide and Perth cooling. Investors will find opportunities amongst that, especially with home buyers backing out. So I think investor behaviour is going to stay pretty strong and pretty steady.
Yeah, you've sort of almost half answered my next question for you, and that is a wait and see approach. Is that becoming the dominant mindset? Now, that can extend beyond the investors, obviously, but there's a growing sense that people want clarity before making final big financial moves. So what do you think about the hesitation? Is it temporary, or could we see a longer period where buyers just, remain on the sidelines?
The way to answer this is a little bit around how we're talking to our clients. And again, they understand the basics. Now, if we get 1, 2, 3 interest rate rises, we will run a simulation and explain what those repayments look like. We'll run through, should they fix or should they remain variables? Because with a cooling market, there will be opportunities for buyers who are ready to go. Yes, they'll take a more cautionary approach. Yes, they're aware of some of the global challenges and uncertainty impacting the market. But when the right opportunity comes up, there are approvals in place and they understand what may happen in the future and what they're able to do right now. And that's how we're trying to help manage this with existing home buyers and investors, as well as existing clients, just managing some of the questions they have about fixed and variable interest rates. Educate and inform.
And that'll do us. That will wrap up our Saturday morning property show. Anthony, enjoy your weekend. Look forward to catching up as always in a couple of weeks' time.
Thanks very much for having me here and have a great weekend, everybody.
And just a reminder here, something coming up on Monday. A major compliance crackdown in Sydney has resulted in a high-profile real estate agent, Joss Tesselin, being banned from the industry for 10 years following a lengthy investigation. We'll bring you more details about that first thing on Monday morning with the Real Estate Breakfast.
Explore new property destinations where you could live with exclusive interviews covering real estate news and market insights.
I want to talk to you about history because it does show Australian property markets pretty resilient, even during major global shocks. If we go to the GFC, price declines were modest.
There were so many people during any kind of a crisis who say property prices in Australia are going to face a catastrophic fall. And none of it's ever happened. But definitely, we're going to see some heat dissipating out of the market simply because we have so many events happening at the same time.
What we're seeing, I think is fair to say, is hesitation. Buyers are stepping back. Auction clearance rates, as we said on Tuesday, they are slipping and decisions are being delayed. How much worse that gets? Well, time will tell us.
We connect you to the best real estate information across Australia. The Real Estate Podcast.